Hello everyone, this is Rakesh Kapilas and I welcome you all in my class and I hope you all are good at your homes. So today we will discuss class 11th accountancy and the topic for the day is journal. As in our previous videos we have gone through different types of journal entries, means how the different type of transaction can be recorded, can be journalized in books, and we have covered the transactions relating to uh, commencement of the business, sale and purchase of the goods, drawing of the goods, drawing of cash, drawing from bank, different type of situations of goods relating to goods given as charity, goods given as donation, goods given as free sample, and goods used for personal purpose, as well as goods used to manufacture assets. So now in our today's video we will try to learn some of the more transactions to be recorded, how they can be recorded in the journal books, and these are in front of you. You all can see this, that the very first is expenses on purchase of asset. Whenever any asset will be purchased, all the expenses incurred in order to purchase that asset will never be shown separately. These will become the part of that asset, because all the expenses incurred in connection with the purchase of the asset or installation of the asset or erection of that asset will become the part of the asset, and the entry for that will be asset account debited to cash or bank. Suppose we have purchased a asset of rupees 1 lakh and we have spent 20,000 rupees to erect that, to install that, or to purchase that. Then we have to make the entry asset account debited to cash with 1 lakh 20,000. That 20,000 expense will not be shown separately. The very first expenses on purchase of asset. Come to the second, expenses on purchase of goods. If we are going to purchase the goods and we are making some sort of expenses to purchase that asset, but maybe freight, carriage, wages, loading, unloading charges, transportation charges, or any other expense. But in the case of goods, these expenses should be shown separately, and the entry for that will be purchase account debited. That name of that expense means like freight account debited to cash or to bank. If we have paid that in cash, to cash. If we have paid that in check, then we will record to bank. So this is the difference between these two. You all can see here, if asset is being purchased and expenses made, it will be added in the asset, while in case of goods these will be shown separately. Third transaction in this case, that is if you are paying any expense in advance, which is called prepaid expense. If you have paid any of the expense without getting the benefit of that expense, means you have paid or made the expense in advance. Like suppose the rent of the 2013 is being paid in 2012, means like the previous in the previous month the expense of next month is being paid, then the entry will be prepaid expense account debited to cash or to bank. Here you have to debit the prepaid, not the expense, because expense has not become due yet. When this expense will become due, then you will make the entry expense account debited to cash. Otherwise, right now you will make the entry prepaid expense account debited to cash or to bank. Come to the next, that is if you are paying any of the expense which is unpaid, which is also called outstanding expense. Let me tell you, outstanding expense is that expense which has not been paid and the benefit of that expense has been taken. For example, I have taken one shop on rent and I have used that shop for the whole of the month, but I have not paid that rent. Up to the end of that month it will become outstanding expense, and whenever I will pay this expense, the entry will be outstanding expense account debited to cash. Here I have to debit outstanding expense. Why? Because I am not paying the expense, I am paying the outstanding expense, and which is a liability. Outstanding expense account debited to cash. Next, income received in advance. For example, like if I have not worked anything, but income I have received in advance, like without doing, if I am getting something in advance, then it will become my liability. Why it will become my liability? Because I have to work while income has been received. So for that, entry will be made cash account debited or bank account debited to income received in advance. In this case, income received in advance will become a liability for the person who is going to receive this. So cash account debited or bank account debited. If you have received the income in cash, cash in check, bank. Cash account debted or bank account debted to income received in advance. So these were the entries relating to expenses on purchase of the asset, expenses on the purchase of goods, expenses paid in advance, outstanding expenses, right? Payment and income received in advance. Now in the next phase we will try to understand the two different aspects, that is how to deal with the trade discount and cash discount.